Hello, everyone, and welcome to the Business Conversations with Gaitha. My name is Gaitha. I run a company called Regal Africa, where we help our clients create wealth. And when you're creating wealth, you really have to think about investment income, and there are very many different asset classes that you can invest in. One of them happens to be real estate, but at the same time, when you're building a company, because that's another way to actually create wealth through actually having a business, you can actually be in the real estate business. So today I'll be taking the time with one of the experts here in Kenya who will be talking about how to build a successful business in the real estate industry. I am very excited to be having this conversation because when I decided to start this business conversation with Gaitha, I really wanted a place where people could come in and listen and learn from people who are doing these different things in the industry, who are running businesses, so that they can share with us what are the things that you need to do to ensure that you're successful, you're creating wealth, but most importantly, creating generational wealth. And so today I'm very excited to be bringing on board Kenneth Masika of Lloyd Masika, and he will just be, talking to us about his experience in the real estate industry. And before I go in and just, have this conversation with Ken, what I like to do usually is just read a bio of Ken to share with you his experience in the real estate industry so you can understand why what he says is important and why you should be listening in today. So I'll go ahead and read the bio for Ken. So Kenneth Masika is a director at Lloyd Masika, a real estate firm in Kenya, and is the vice chairman of the REITs Association of Kenya. Kenneth has over 19 years experience in the property industry, most of which he gained as a partner at Lloyd Masika Limited. His specialties include urban property valuation, both in Kenya and in the East Africa region. He is well versed in property management and estate agency services. Kenneth holds a Bachelor of Science in Land Management from the University of Reading in the United Kingdom. He's a full member of the Institution of Surveyors of Kenya and a full licensed and registered valuer by the Valuers Registration Board of Kenya. Kenneth was the first CEO of a REIT in Kenya, which is the Stanley Fahari REIT. He is a director of various companies, and he continues to champion the growth of the real estate industry in Kenya. And so I am very excited, like I said, to have Kenneth on board because really I would like this discussion about real estate. Can we start talking about well-planned real estate? Can we start talking about investment grade real estate? Can we start talking about affordable housing? I always tell people when you think about real estate, you need to go beyond plots, right? You need to start thinking about how do you create a business out of this? And there are various ways and different sectors of the industry that you can take advantage of that. And so like I said, I am happy to have Kenneth on board to be able to share with us his experience as we talk about real estate. So welcome, Kenneth. Thank you for being on my show today. And like I said, I really wanted to just have you on board so that I could be able for you to share your experience with people on the show or people who will be watching later on. So Ken, Lloyd Masika, which is the company where you're a director, was established in 1979. What do you think it takes to run a successful real estate business in Kenya or run a real estate business anywhere in the world? What do you have to do to make sure that it's successful? Go ahead.
Thank you. Thank you, Anne. It's a joy and privilege to be here. So like you rightly said, maybe I'll take a step back. Lloyd Masika, obviously founded 1979. We offer a full suite of property services, that's property valuation, management, and agency. So, and mine is a journey of obviously coming and joining partners who include the chairman, who happens to be my father, who was obviously had started the business 79, and I'm joining the journey. So what have I seen in my 20 plus years that it takes to run a successful property business, other than the normal generally agreed principles of running a business? This is your corporate governance, your auditing, your accounting, human resource, and the like. Property has sort of three or four specific items I would say. One is competency. You need to have the right staff. working for you, and more so the partners in the business. And if you look at competency, I mean experience, knowledge of the market in country, in the region. In our business, we've got 7 partners with experiences ranging from over 40 years through to the younger partners like myself, who are at 20 years experience thereabout. So you find that when you do engage with us as a business, whatever opinion will come out of Lloyd Masika will tend to be a well thought out opinion, not just Ken's opinion, but we bounce things off each other and draw on that knowledge pool. Integrity is the next big point, because obviously when people approach you in property, they want to know what are your genuine thoughts and your genuine, unshaded, and not rose tinted glasses. You sort of state it as it is.
Yes.
Because for most people, it's an investment that they're looking at going into, and it's a long-term investment. So they're looking for you to be honest with them. Number 3 is transparency. One of the functions that we do very well is property management services. And this is where people who are either in the country or are out of the country buy a property and are busy doing their main core business and want to hand over that asset to somebody to run and manage it for them, collect rent, maintain it, make sure it's insured. And so for that, there has to be transparency. When you're handling clients' money, there is a fiduciary sort of duty of care. So you need to be transparent in your systems. This is what we've collected. This is what has been expensed out of that in repairs and maintenance and processes and how that has gone. And finally, for property is time. Property tends to be a very, especially for us Africans, forgive me for saying that, and Kenyans more so, we love our property. It's something we really sit and discuss individually as a family setup. It tends to be a big ticket item for investment. And so with that comes some level of trust with the person that you're dealing with. And some of these things, like they say with friendship, it needs time. You just have to be in the market and build your name steadily and surely. And the more success stories you have, then that builds. So time is something you just cannot, unlike tech, property won't work that quickly. People just have to be confident with you.
Okay.
Yeah.
Interesting. The last thing that you said, which is build your name, a trustworthy name, build a brand, and it takes time. So anyone who's interested in real estate needs to know that it won't happen right away, that it takes time. You guys have been in business since the 70s, over 40 years, and you're still in business, which means you're doing something right. I liked what you said, that it's very important to have the right team, because I've been having conversations with very many different people, and that's what they say is usually is a challenge in business, having the right team that has the right competencies. So if you have the right team, then it's very important for you. Then it's easier for you to actually have a successful business. And having the right partners, like you say, is very critical, so that you be able to have, really good different people who offer different things in the business to make sure it's successful. And then integrity and trust. Those are very critical, because like you said, Kenyans are very connected to real estate. It's very emotional. It's their biggest ticket item. It's something that they don't let go of. But at the same time, I always say it's a business. It's an investment. So you also have to make the right decisions. And I say you should take emotions out of it. You should look at the numbers. But I don't know if you agree with me or not, but I always say look at the numbers. Does it make sense to invest in this property? Or are you just buying it because you want to be known that you have a land somewhere, or a hotel somewhere, or a building somewhere? Does it make financial sense? But people make decisions for different things. So again, thank you very much thank you very much, Ken, for that. For me, I'm quite curious. Why did you decide you wanted to be in the real estate business? Why? Why real estate?
Well, I guess one could say it is a little bit of a mix of circumstance and then growing on from there. My parents come from the school of thought that an idle mind is a devil's workshop. So I think as I grew a little bit older, they felt that it's high time this young man got to realize that money doesn't grow on trees, the proverbial saying. So during school holidays, I would spend a couple of weeks at Lloyd Masika, sort of interning through the various departments. And one of the things that caught my attention then was, when people think about property, you think about land and, I don't know, an apartment or a house. But when you spend time in some of the larger property farms, you'll visit ranches, you'll visit tea farms, you'll visit sugarcane plantations, you'll visit properties at the coast, you'll go to manufacturing enterprises, hospitality, you name it. And that part of it really intrigued me then, and still does now. And that's what made me go into the business of real estate, to see just the multiplicity of uses that land supports. And you learn something. If you go to a tea farm, you learn how the ketepa you see in your tea bag comes about. It's really, really interesting. You're the kind of person who likes to learn about different processes and the things you sort of take for granted and where they come from. It was very interesting. So sort of slipped into it, but I enjoy it. I also am not a 5 to 9, 9 to 5 seated on a desk. I don't think I could do that. So I do like moving around and seeing new places and meeting different entrepreneurs.
Okay, that's quite interesting. One is that you were exposed by your parents to the business. I always tell parents, especially if you have a family business or something, expose your children, and then they will then make the decision whether they want to be in the business or not. But they can't know unless they're exposed to that. So that's quite interesting that you're exposed to it by your parents. But then after that, you really got really interested in it. And one of the things that you just mentioned right now is that real estate is dynamic, right?
Correct.
Right? The use of land is dynamic. There is the commercial aspect, there is the residential aspect, there's the fact that you can use it for agribusiness, there's the fact that you can use it for apartments or hotels or everything. So it's just not one thing. So for anyone who's interested in actually setting up or running a successful business, you have to be aware that there are various ways to be in the real estate industry. And I guess if you find your niche, then that's a good thing. But yeah, it's fun industry. I know I'm in it. I've been very interested in real estate. I studied it. I've worked for a real estate company. So it's good to hear that you really thought it's a good industry to be in based on the exposure that you had. So Ken, tell me, real estate, everyone talks about real estate, especially in Kenya. But we have seen the slowdown of real estate the last couple of years, right? So the prices are not appreciating as much as they were. So tell me, what do you think the future holds for the real estate industry in Kenya? What does it what does the future look like?
What I can say for real estate, the future is bright. I think you need
Okay.
to look at real estate as you would any other commodity. Everything has a cycle where it's up and down, because
Mm-hmm.
all the things are in business. Everything runs off demand and supply.
Okay.
So the way we look at property is there's something called a property clock. And what the clock basically does, you can divide it into 4 quarters. And if you start at the top of the clock, where it's now rents at their peak, yields at their peak, then that gets a lot of people to go into property development and build whatever space that businesses are looking for and
Mm-hmm.
all of that. So sooner or later, as everybody jumps into to fill in that gap, you then tend to have an oversupply. And so what has happened is that the rentals now start coming down. And as they're coming down, the situation gets worse because property has a lead time. So you'll find when the market turns, there are still people who are finishing their developments. And so that swings down until the bottom, which is maybe where we are now,
Okay.
where now you've got a lot of vacancy and a lot of empty spaces. There's a lot of pushback on rental. And this is a conversation we were having before COVID. Business was slowing down. And then that situation again corrects itself because people stop providing the space, and so demand starts outstripping supply, and you have the full circle completed. So what I tell people is that if you look at property, it will have its ups and downs in the cycle, but over the last 40 odd years, if you look at the cyclical nature of it, it does go up and down, but if you put it on a graph, it's going up and down, but on an upward trajectory. In other words, property prices in 1980 will not be what they were in 1970, right? In
True.
1985, property prices might be slightly lower than 82, but not, you see, so it's an up and down, but it's an up and down on an upward trajectory. And the one thing I always tell people to remember about property is that it is a long-term investment. If you get into property for quick wins, that does not normally play out well. What they call speculative sort of investment, and the rest of it has significant risks attached to it. But if you're investing in property as an asset class, then you need to have a long-term view, because to really draw out the value in property is, if you buy vacant land, you'll have to develop it, rent it out, let the leases vest, and then now you can explore or enjoy your long-term income stream coming from the leases that escalates. So when you look at properties that way, then you need to realize there's a capital appreciation where it grows in capital terms year on year. And then rental income. Now, rental income is immediate, but capital appreciation needs time to build through. I think the last time I looked at some statistics, if you look through the decades, if you take, say, 10-year periods, you'll find that property tends to outperform equities and bonds and all the like, if you look at it on a 10-year period. But in between there, you will have cycles. And in Kenya, our cycles tend to also pretty much, unfortunately, mirror our political calendar. You tend to find people tend to slow down or have a wait and see, but this year is exceptional. I think COVID needs to be treated just as that, as an exception. So, but even if things are down, they will pick up. And if you look at the long-term nature of it, you can't go wrong with property.
Okay. Interesting what you say, that the cycle is bright. I mean, the future of real estate is bright, because I've been talking to very many people, especially developers, and they are like, they will not go back into real estate development because they've been burnt. Do you think it's because they were not familiar with the cycle of real estate, because people thought that real estate will always go up? So then the business of development, let's just say that, they thought it will always go up, and then because it slowed down, or it is going to go down, then now they're having problems. Or the same thing with people who are selling land. Is it people are not aware and they just think anyone can get into the real estate industry and just be successful? Or does it take someone who's been seasoned in the industry, like you and your team at Lloyd Masika, to understand that cycle? Because what you're telling me, it's true, right? Like what you say, people overdevelop, especially, for example, Nairobi, there's overdevelopment of commercial property. And so now when there's so much property out there with less demand, then the prices go down. But a lot of people are surprised.
Yes.
Why are they surprised? Is it that they don't know, or is it everyone is a developer?
I think,
right?
Remember in our first question, one of the things I said that run a successful real estate business, and I think that should encompass also development, is that it takes time. Okay. And with time, you tend to have institutional knowledge and expertise that builds in over that time. Where developers have gone wrong is, like you're rightly saying, they're seasoned developers, people who do nothing else other than develop. They buy land, they land bank, and then they really target their developments. The more experienced ones, you'll tend to find very quickly realize what sector of the market they wish to play in. So you'll find the guys who will play in low income space, middle income, high end, and you'll find they tend to know that terrain quite well. The people who tend to get their problems into problems with property development are your developers who are not developers. And what do I mean by this? In your other business, the good Lord blesses you and you make a super profit of 200 million, and you decide, now I'm going to jump into real estate. And then what you do is you have a look at Mr. John and you say, fine, this guy bought this 1/8 or 1/4 acre in Ruaka, and he built his apartment and is making a killing. Now, the danger with that is that's number one, what we call speculative development. You're getting into something that you haven't done your homework to realize, number one, who are you building for? Why are you building for them? What makes you sure that you will have an offtake at the end of your development? Why would people come to your development as opposed to somebody else? And when you now start asking those questions, you realize that development is a profession by itself. It is not something to simply jump into. And why you tend to find seasoned developers can weather what they're going through now is obviously over the years they've learned how to absorb shocks, and they've got some built-in fat along the way that the retained profits, or whichever way you want to look at it, which now, if Mr. X just did like a deal and puts all that money into development, if the project tanks, then he's in serious problems. But the biggest issue with them, even if you park all that aside, is a lot of people are very happy to pay a contractor 100 million shillings to do the construction part of the development. But they are extremely resistant in spending 2 million shillings on a feasibility study to tell them whether what they are building there's demand for it, what is offtake looking like, where the offtake will be in the 18, 24 months it will take to get to where it is. So you tend to find a lot of the time, like for us in the real estate business, you tend to find a lot of those clients will be coming to you when it's too late. They have already developed, it's maybe wasn't the highest and best use of the parcel, or they have developed something that the market has moved away from. And then now that time it becomes it's trying to put a band-aid on a situation. But for them, what I normally say is do your consulting. If you're not a seasoned developer, it is not, it's not a game to take risks with. The money required for development is significant, and you'll tend to leverage. And now if it goes wrong, it will affect the rest of your other businesses. So consult.
Wow, Ken, I really like that you've highlighted that, because again, like I've been saying, I've had this conversation with very many people, because real estate is very capital intensive. And like you said, I have seen everyone say they're a developer. They have a piece of land and they decide they're going to go in and put flat, but they don't even know if that's the best use of that. Or I have a piece of property and I'll put a hotel or a hospital or a school, yet they have not done a feasibility study. But they're very willing to pay an architect or a construction, but then by the time they put the whole project, they find out that was the wrong project to get into. So really what I'm hearing you saying, for anyone who's very serious about the real estate business, you need to tackle it just like any business. You need to make sure that you have market research. You have to make sure that you know the industry in and out, so that you know what it takes The other thing, I know you say that most people who are successful have institutional knowledge. That is great. And also you alluded to the fact that someone needs to look at the whole development cycle, all the way from feasibility study, all the way to offtake of the property. You need to look at all that. Project finance, property management, construction, all that has to be looked at. It's not really about, I put this property and then I hope people will come because everyone buys land or everyone buys apartments or everyone buys office spaces. You really need to really look at that. Wow, thank you, Ken, for that. And again, really good insights. And I hope all of you are following in. I see some people on Zoom and also a few people on Facebook. What I would say as we continue this conversation with Ken, if you have any additional questions that you really want to find out from him, specifically about running a successful real estate business, just go ahead and put it on the chat, or you can put it on the comments, so that we can ensure that Ken is able to answer any of those questions for you. So Ken, I remember I met you because at that time you were the CEO of Stanley Fahari IREIT, which was the first REIT in Kenya, which was really, I think, a good thing for the market. And you're also currently the vice chairman of the REIT Association of Kenya. I think I would like you to take maybe the next couple of minutes to just talk to us. What do you think people need to know about REIT, and how can people in the business of investing take advantage of this investment opportunity or this asset class? tell us more about REIT and what people need to be looking at, because I feel like a lot of people lack that information. And I know that's what you're doing at the REIT Association of Kenya. You're making people more aware. But you've been in it, you've run a company, you're in the association. Tell us more about the REIT and what people need to know so that they can take advantage of this either as investors or as people who develop properties who want to eventually sell to a REIT. Go ahead, Ken.
Thank you. So let's start with the definition of a REIT. So REITs are it's actually a very simple model. A REIT is a structure in which you put in assets, preferably good investment grade assets. You'll normally have a yield threshold, which will be your return, and you put in the assets that are worth X million of dollars or shillings. You then securitize that. In other words, just break it down into shares that add up. The total value in the beginning should add up to what the initial value of the assets are. And now after that is those shares tend to be listed on a stock exchange. So what a REIT does is it pulls property together, brings investors together, because as you're pulling the properties, people are putting in money to buy the shares, and then you list it. So it's a very, very simple model. Nothing complicated about it. What are the advantages of it is that it's regulated. The CMA published REIT regulations. So it's a regulated investment vehicle, and they're very rigid in terms of corporate governance, transparency. For example, if all the valuations for the properties that you're onboarding must be made public on your website. All your leases are there. So if an investor wanted to interrogate the same as to project where your rentals are going to, and then do a back workaround to see what your figure or what your share price should be. All that can be done in a REIT. The advantage also, again, of being traded is it's easy to get in and out of it. You can sell a certain amount of shares, raise the capital that you want, you can exit, come back in. It then also gives access to, in fact, one of the main things that the CMA was very keen to get REITs going is that they recognize that there's a big desire to invest in property in Kenya. But it was for a large majority of the investing public, so to speak, properties were always out of reach just due to their capital nature, the size and amount required, the complexity involved in, we've all had stories of people getting burnt by buying a fake title and the like. So REITs were seen as a way to get those people to acquire shares in a vehicle that owns an asset that has gone through all the due diligence and the title is clean and all of that. And then also give them an access point into assets they would never buy. Because I reach due its size and pulling people, you're able to buy shopping centers, large commercial developments, which, there are a lot of us actually, to be quite honest, other than institutional investors and say the very ultra high net worth people. Very, very few people have office blocks and industrial parks. So I read that's what I read does. It gives your Kenyan, your sort of Wanjiku, if it were, access into property, but then risk-free, takes away all that headache of, am I buying the right asset? Is my money safe? Assume I don't want to be in this investment. How do I get out? At what price should I buy? Because that's the other thing that people tend to buy property. Price discovery is a bit of a difficult one to judge in our market, especially. And because the share is traded, then you find price discovery is not an issue. So that's in essence what the structure of the REIT is. So at the REIT Association, what we've been trying to do is grow that knowledge, that you can actually invest in property, though indirectly through a REIT, but the REIT, at the essence of it, holds a tangible property asset at the bottom. So you can invest in that way in property. It also gives you the advantage of moving away from the illiquid nature of property. But the biggest advantage is that in the regulation, REITs were made tax exempt for the income that they generate. So as a private property holder, you'll find that we're all aware that KRA nowadays is taking, they can't even wait. I hope there's nobody from KRA on the call. Before they used to pay it quarterly.
KRA wants the money.
Correct. So now you realize you're paying you're paying a 10% rental tax every month, with them then computing your tax liability at the end. So in a REIT, that tax on income, it's exempt, provided it meets certain conditions, and they're very easy to meet. They have to distribute 80%, more than 80% of their income. So they're very efficient tax vehicle. So the REIT Association looks into growing that space, lobbying, education, trying to demystify, because somebody will say, I know I own that property because I've got a title deed. But what you're telling them is, for the value of that one property, if you put that money into a REIT, you'd have you'd have access, or you'd have bought into a shopping mall. You'd also get diversity to all these small things, smaller, different types of properties. And you don't need a title deed. But Kenyans still have it in their mind that I know I've got a property when I've got a title. So hence education has been a big part of it. When we were at the REIT, we used to have investors walk in, and rightly so, and ask for their title deed. But then you tell them when you explain to them, the way you treat your Safaricom shares or your EABL shares is the same way you treat these shares. That used to catch them quite unawares. So the challenges we are seeing
Really?
is more of education, which now the REIT Association is trying to grow that space. We are also fighting for to keep the exemptions that we do have, like the corporate tax exemption, and also lobby for a few others. Like you'll find in the UK, REITs are exempt from stamp duty, that is kept exempt from a few other taxes, that just to make them more accessible. So we are fighting for that as well. And then also trying to be a one-stop shop for anybody looking at using REITs as an investment vehicle. In terms of people looking to develop, the regulation allows for 3 types of REITs. There's an income REIT, which Fahari is, and that, by the nature of the denotation, they acquire already existing developed leased properties for income. You have a development REIT, which now undertakes development work. And that, I'm sure that has been quite a topical conversation around, can affordable housing be undertaken using a development REIT, student housing, and all of that. Again, because it does benefit from the tax exemptions. And then you have a Sharia REIT that's compliant with the Sharia laws. So in my opinion, REITs is the way to go for the future, because as people acquire property, they tend to forget that it is an asset that must be managed like any other asset to derive value and sweat and sweat value from. But people will tend to find I'm sure you've met in your advisory services, you found the person who's got R1 billion worth of property, but can't raise 50 million shillings in cash.
Yes.
Right? So it's geared towards solving those traditional aspects of property ownerships, and people realizing that this is an asset that you've invested a significant amount of capital, and obviously should be yielding something for you, and being maintained and managed at its optimum. So REITs definitely the way to go. Any investor looking into it, actually institutional investors in Kenya, I would recommend look at a REIT structure very closely. I mean, world over, we did a survey, and we realized, like, for example, pension schemes. World over, you'll find they invest 95% through indirect ownership, REITs and all of that, and 5% direct. In Kenya, it's the inverse. You'll find it's 95% direct and 5% and now with that comes now all those other things I was talking about, where did you buy it at the right price? you want to sell it to pay off pensioners, and you find now in this, when COVID hits, getting out of it is becomes another very long conversation to have, leave alone at what price and all of that. So REITs really do offer a transparent and tax efficient vehicle that I feel anybody who's seriously looking at property, that is the way to go. Long gone are the days of having 50, 100 properties. Managing them becomes a very difficult conversation.
Wow, thank you, Ken, for just sharing what you think people need to be looking at, because I agree, especially like you said about institutional investors, high net worth investors, but even anyone else who's really going in as a property developer for some of these commercial properties. You really need to look at these things. One of the things you mentioned is education. And what I do have to say, I mean, today, this is a business conversation. That's why we're having this conversation with Ken about this, and it's about real estate business. But I always tell people you should also be in the business of investing. So that's why we're bringing in REITs. So you can say, part of my money that I'm going to do, I'm going to invest in the real estate industry, but I won't do it directly, because there are different ways of doing that. And again, this show is about showing that opportunity, that besides just having this commercial building with your name on it, right? That then is also a challenge that has all these challenges. You can actually own a diversified pool of property, which then can withstand the shocks of what's happening, for example, with COVID or with different things going on. I like the fact that you mentioned that diversification. I just said that price discovery, but also what I see is that a lot of developers, if you're a developer and you're watching this show, you might have developed, and most people were usually selling units, and then they reach a point they can't sell all the units and they need cash. Again, it would be actually have been better if you actually built the development, got tenants in, and then now sold the property to a REIT, right? That's a way for you to exit out, because I cannot tell you how many people who come, especially because the property in Kenya is very expensive, billions of shillings, millions of shillings, and yet who has that amount of money to be able to pay? There are very few people. So the exit is very challenging. So you're asset rich, cash poor. But then if you have an investment grade property, you can actually sell it to a REIT. You hold some of them, some of your some of the shares, and then you can also liquidate and get cash out. So I think REIT is a great way for people to really look at and understand that in real estate there are different ways to do it. And so you could be in the real estate business directly or indirectly, and you want to use professionals who manage the REIT, property managers, also the REIT managers. So thank you, Ken, for that and just giving us. I do have to say that I know REIT Association of Kenya usually has these different trainings. The next one should be on November 3rd. So if anyone is interested, they can check out their website or reach out to us at Regal Africa, and we can share with you the information. Because once you learn, once you know the opportunities, that's when now you can invest. That's when you can be able to create wealth. So thank you again, Ken, for that. So Ken, my next question for you before we go to the audience to answer more questions is this. What can you advise a person who is interested in being part of the real estate industry? Should they choose to specialize on a sector or all sectors under one firm, right? So for example, at Lloyd Masika, you do property management and estate agency. Do you think that people need to do that, or should they do it like I do property development, estate agency, property management all at the same time? Like, what is your advice for someone who's in the real estate industry? What should they do? Should they specialize, or should they just be an all-around real estate company?
All right. Well, that's an interesting one to have. I think the issue becomes, how large do you want to become? That you find the property market in Kenya and this is common throughout the East African region. Our property markets are not as developed or deep as some of the other markets like you'll find in South Africa, where now you can decide, I will tackle agency only, or I will do property management only. So you find if you want to be a sizable organization, you have to do all three. That's valuation, property management, and agency. Because again, if you look at Kenya, where really would you be rendering your services? It would be Nairobi, Mombasa, Kisumu, to pretty much 95%. And now Nakuru is coming up in a big way. So you find, given the size of the economy, or not the economy, the size of the property market in Kenya, specialization now then narrows a smaller pot or a smaller kitty into an even smaller kitty. So I would propose try and do a comprehensive property offering. And now what this leads to is people who do well in some of these property sectors, you'll find are farms that offer the comprehensive suite, right? So partnerships are very key. Hence now then, if you want to specialize, you can specialize in property agency. So you find in say ourselves or Knight Frank or Tyson's, you'll find there's a head of agency, there's a head of valuation, there's a head of management. So there are specializations within the farms, but the farms themselves offer the complete suite of property services. So in our market, no. In larger markets, South Africa, the UK, US, some of those, yes. I mean, the specialization can even come down to the people who do nothing else other than arrange finance for developers, whatever it is, and senior debt, mezzanine finance, and all of that stuff. I'm not a finance person by any stretch of the imagination, but you'll find it's a property, yes, but you find it's a property person, but by background and training, but they are toe to toe with any corporate finance person, because the markets are that specialized or that developed, and require those kind of services. So Kenya, we are not there yet, but we're heading there. We're heading there. As you get to things like
You think so?
we are. I
You
mean,
think we're heading there? You think
we
we're,
definitely
or
are.
we'll stay informal?
No, we're definitely heading there. I mean, look at
Eighth quarter. You
no,
think
no, no.
that's
I
the
think
space?
all of that is going to end. I think with
Okay.
sort of, without digressing now, if once the government starts picking up on its planning policy and all of that, and there's the counties, with this development, counties need to raise revenues from somewhere. So sooner or later,
Yeah.
all these rates for land are going to start increasing, and there'll be all manner of charges, which now will render having vacant, idle, speculative properties really expensive to have. So that should
Okay.
see those being pulled together and some development coming out of that. Then you remember that the last sort of figure I looked at, pension schemes are supposed to have 1 trillion shillings roughly in asset worth, right? And as by RBA, 30% of that needs to be or should be property, which means then you've got around 300 billion of property in what sense, shape, or form. I think we know there's not a lot of investment grade property in Kenya, so a lot of that tends to be undeveloped land. And so if you look at that land, that pool of land being brought into the development sphere, as in it's now given a use and developed and starts generating income along with capital value. One of the best ways to do it is a REIT. Now, as that grows, then you'll find a lot of these specializations will grow. But for the time being, a lot of it is vacant land, which, well, it's the other than valuation. Maybe for the vacant land, you don't need a lot of other services. So it's growing. It's growing, and the future is it's really bright. We're getting a lot. We've seen a lot happening around the National Lands Commission. They're doing their best. They're scanning titles at virtually all the land registries. They are trying to streamline the issuance of titles and all of that. So the government is doing their part. It's a case of Rome wasn't built in a day. So it will take a bit of time, but it's heading in the right direction.
Okay, I am very glad to hear that, and I do see a few people who are in real estate who have joined us. So again, things will change in the real estate industry just because of what's coming up. That's what I heard you say. For example, because of the planning policy, most people actually made money because they had those speculation on land prices, and they have been going up until now. I feel like they're overvalued, right? So if it reaches a point whereby, the land is too expensive, you have to pay this rate at the valuation, right? And then you have to, the prices are not going up. What do you have to do? It will force people to have a different strategy. And maybe at that time, then now I think real estate companies will have an advantage. If you're a developer, do you come in and you do a JV with some of these landowners, or what will happen? So I think a lot of things will change as things go by. But I think it's a wait and see. I don't know. Do you have a time machine to know when that will happen, so anyone in real estate can start preparing, or should we start preparing right now, Ken? Like, what are you saying? Is it years? Is it decades? Like, when is this going to happen? Because if I'm running a real estate company, I want to know, when do I start making changes to the usual things that I've been doing? What do you think?
I think it's a matter of years.
Okay, yes.
If you just look at the way, have a look at since the new constitution, and then when people talk about all manner of things with it, but it brought a lot of changes to whichever sphere. And land has been no exception with the setting up of the National Lands Commission to address all injustices. You've got your environmental courts, NEMAs, and all of that. Now working sort of in tandem. I think a lot of the issues with property was always, there were a lot of moving parts, so you never knew what was happening. In terms of planning, people were able to buy public land and have the user change to something else. All of that now has become virtually an impossibility. If you do buy land set up for a school or public user, you're going to have to put it into a school or public user. And so once the laws are followed, good planning policy is meant to meet the needs of the people that the land as a factor of production is supposed to serve. It has to change. It will not be business as usual.
Okay. All right, not business as usual. That's music to my ear. But we wait and see, because you say it will take some years. So I don't know. We wait and see. But I'm very interested in seeing a more vibrant and dynamic real estate industry. I mean, there's a lot going on in the industry, but I'd like to see more being done. And just what I feel like. Let me not go there for right now. Let me go to the audience and ask questions, and then I'll come back and ask a question that I have in regards specifically master plan properties. So I do see some people on Zoom. If you have any questions, could you go ahead and just write them on the chat box? I know Ken, who has been in real estate for almost 20 years, would be glad to answer that question. Also, if you're on Zoom, go ahead and, if you're on Facebook, go ahead and just write a question so that Ken can be able to answer that. Because like I always say, that this is a conversation. So yes, we're having a conversation with Ken, but we also want to ensure that you who are in the audience are able to get your questions answered, because I know a lot of people are very interested in real estate. So this is a man who can tell you how to make money and make sure your business is successful. So go ahead and just write a question, and he'll be glad to answer. Okay, so I guess, Ken, well, I'm still waiting for people to ask questions, because I'm seeing mostly comments. I do see some people on Facebook writing comments. But I have a question here from someone in the diaspora, right? So Ken, this is Mary, and she says, for someone in the diaspora, what is the best real estate investment or approach at the moment? So people in the diaspora, as you know, have a lot of money, but they should be able to put it somewhere that they can trust, and they don't know. What should they do?
So for people in the diaspora, maybe I'll start with what the challenges I've seen a lot of them face is who to deal with, what to buy, where to buy, sizes and all the rest of it. And traditionally, I think that is still the case. The best way to invest is do a bit of your due diligence and engage a reputable professional firm. right? They'll have a duty of care to after understanding what it is that you're looking at and the areas you want to invest and your budget, they will be in a position to, number one, offer you the best offerings that will maximize the returns on your investment. Number
Okay.
two, they will also be able to, whatever, when you purchase the asset, they're also able to manage it for you, because obviously you're not in country, so you can't manage the asset for yourself. So they can offer management services, collection of rent, and all of that. And you know your rent is somewhere secure. The other investment avenue that I recommend people in the diaspora to look at is that REIT structure. It's transparent. The reports are online. The share price is traded daily. You know, you're buying shares that you can get in and get out of. You know exactly what's in the REIT. You just need to pop into their website and see what they're investing in and where they're investing. So that's why I believe REITs are definitely very quickly going to overtake that traditional way of having a chat with a professional firm, because like I said, remember the whole issue around trust and
Yes.
property and all the rest of it.
Trust.
There's always that feeling of trust when you're dealing with one person to another, which again, when you're in the diaspora, then you're also, even with firms, you're going by reputation. And with a lot of the firms being privately held firms, then when you do get to transparency, you'll have to make an informed judgment call. Maybe you can say, fine, they've been around for X number of years, so yeah, they must be doing something right. But you see, a REIT structure is regulated and governed, and by law, they're supposed to pay out a high dividend every year, so you know you'll be getting something, and it's tax efficient. So long story short, currently, have a chat with an experienced firm, registered. Please avoid cousins and relatives and the rest of it making decisions for you, because that has always led to a number of challenges. I think I'll park that that one there.
Okay. Okay. Thank you, Ken, for that. So, Mary, as Ken has said, if you're in the diaspora, make sure you use a reputable firm to buy the property, right? Also, get someone who can manage it for you because you're not in the country, right? So, maybe don't use your family. If you're not too sure, use a good property manager who will make sure that it's taken care of. The rents are paid, insurance is done, taxes are paid, because you don't want to have issues with KRA. So that's the first thing you need to do. And then the other alternative Ken has said is about REITs. I know you were asking a question about the property. A REIT is a real estate investment trust, which right now we have one which is traded in the Nairobi Securities Exchange. You can buy shares in that REIT, which is right now managed, like I said, by a REIT manager in Kenya. So you just go to your broker, your stockbroker, and say, I want to buy shares of this REIT. And then you buy shares, and then you wait for it to appreciate in price for you to sell, or you actually get a dividend yield based on the money that the REIT makes every year, because they are required by law to pay out. Is that correct, Ken?
Correct.
Yes, great. So I hope, Mary, that is clear. But for me, because I'm very big on diaspora, I'm a diaspora returnee, and I always say the diaspora needs to do things differently. They need to do differently. What I would say, Mary, and you can speak to us at Regal Africa, what we've been doing is trying to say, how can we mobilize the diaspora together to come in and develop mega projects together, collectively, not single-handedly, not buying plots, collectively. You are the diaspora. Come in, and now you can actually build hospitals, commercial building, well-planned real estate projects. Like, you can do it as the diaspora because it's very capital intensive, but you can only do it together. So, Mary, that is what I would say. So if you have a bunch of friends or associations in the diaspora, you can reach out to us and we'll be able to help you with that, all the way from feasibility to the very end, and work with companies like Masika in regards to what they specialize versus what we do at Regal Africa. Because I know a lot of you guys don't know, but we do have a Regal Africa properties department that really focuses on real estate advisory and how to help our clients in regards to in real estate. Again, that goes to my next question for you, Ken. So the question that I have is this: do you think that for us to have a more vibrant real estate market in Kenya, we need to focus more on master plan projects and investment grade properties? Do you think that's what we need to do? Or do we continue doing business as usual? I know you alluded to it a little bit, but I'm big on doing things right and formally, maybe because that's how I was trained when I studied real estate. Do you think that's how we change Kenya, or
Correct.
we do
Correct.
things as we've been doing it?
No, you're absolutely right. When it comes to property, and especially when it comes now to development of property, one of the ways to manage development risk is master planning your development, knowing what uses you're going to have there, why you have those uses, why you have the certain allocation ratios for the uses, and make sure, as you also, as your master plan, again, you also get into compliance with whatever the planning regulations are and all of that. In master planning, inevitably, you will have to have a feasibility study which guides it and all of that. So you make sure whatever it is that you're thinking about doing is right for the property, right for the market, and is coming in at the right time. Because the issue with property is location drives value, but you also must be at the right place at the right time and deliver the right product. And obviously, as human beings' needs and desires and tastes change, so that needs to be borne into mind. So master planning absolutely has a significant impact in de-risking. You also do want to have investment grade properties, like and investment grade is just assets that are significant enough and of a high enough quality to attract investment grade or investors, right? One of the reasons why REITs are having a challenge in growing is that there's a lot of offices, say for argument's sake, in Nairobi.
Mm-hmm.
But very few of those investment offices are grade A offices, which is what investment grade investors, be they Kenyan, be they from the region or out of the region, out of the country, that's what they're looking at: the quality, the size. And now quality size is one thing. Then also, has it met all those governance? How was it built? Was it in a master planned area? And with that, you'll always get a better return rather than doing, like you're rightly saying, the age-old way of doing things where you used to buy 200 acres. I think we are all members of SACCOs, and then we've all had that experience. You go and buy 200 acres out in Kitengela. You say the ones fronting the road are going to be commercial, and the rest are all residential. That simply doesn't work. If you have a look at a lot of the people who bought those, yes, they have benefited significantly in capital appreciation over the years. But now, when it comes to development, what do they develop? Right? You can't have some of the estates, some of the size of land was so big that you'd have a 1/8 acre, 2 kilometers, 4 kilometers from the road, and it's residential. Are you going to be getting into your car every time you want to pick up some milk or bread? Or you see, so master planning. So then what has tended to happen is that those parcels have tended to remain undeveloped because they weren't master planned properly. So completely agree with you. Master planning is the way to go, because at least then it also gives certainty to what you're investing in as well.
Okay, great. I'm glad you said location, 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 and you agreed with me about master plan properties. But one of the things you said is the right time. So having the right property at the right time for the client, that would be great. So if you're going to be in the real estate industry, do your market research. What are people asking for? And that is how you're going to make money and stay in business in real estate. So Ken, we are almost out of time, but I have a question here from Nyambura who says, with the young generation, 18 years old now, would you advise them to buy shares, I believe maybe in a REIT, or buy land for a term of 10 years? What is your advice? I guess now you're going into real estate advisory. But I mean, you know about REIT, would someone coming to you, would you tell them, young brother, young sister, young cousin, 10 years from now, should they have bought land today, or should they have bought shares in a REIT?
Well, I'm trying to remember what I wanted when I was 18. I guess it was a case of I wanted to be a millionaire tomorrow. But sort of going back to the discussion, and I think this is a point we touched on earlier. There's always this perception that land is something you'll buy and live there for a decade, right? And anybody who's ever looked at the returns you do get from doing that, buying and living it there, right? No plan as to what you want to put it towards. Yes, it will appreciate this. There's no doubt about it. But you need to ask yourself, if then you look at your piece of land as an asset and you compare it with the other asset classes, right? And when we said property should, in a 10-year period, should outperform virtually all other asset classes, then you'll find simply doing speculative purchase, your return wouldn't deliver that. Let me not guess on the numbers, but basically what we'll just get is that capital appreciation part of it. Now, inherent in that comes the danger of having land simply seated. You own it for 5-6 years. On the 7th year, you wake up one morning and find somebody with a shack on it who claims he's been there since independence. So you have all those sorts of encroachment and the like. I mean, when you're 18-year-old, by the time also you go through the headache of due diligence on a property, title, paying your land rent, ground rent, keeping it secure. It's an onerous task for something. Now, if you ask yourself, if it's just land, it's giving you no income. Bear in mind, you can't eat soil, right? While on the other hand, with shares, it's a more passive income, passive investment. It's managed, you know, it's there. It's easy to get in and out of. My take on it, if I was 18, land appreciates significantly over time, but I don't want to have a piece of land that I have to keep on driving by there to make sure there's no squatter and all the rest of it. I would put my money into a REIT. Bear in mind that a REIT, the asset is there. So as those assets keep growing, your net, and also you just need to keep an eye on when you come to REITs, is the net asset value. And the net asset value for a REIT is the total value of the asset minus the assets in the REIT minus any liabilities. So long as that net asset value is tracking upwards, the traded value will suffer all the nuances of any traded stock. But as long as your net asset value is not falling, which now that we've said or we know that property values inevitably rise, then a REIT is the way to go, because then it just takes away the headache of managing land and property.
Okay. Interesting answers. So for all of you who are watching, I always say this is a new normal, a new way of thinking about business, a new way of investing. I agree with a lot of what Kenneth said. You know, for me, I always say vacant land, legal issues, no income, issues when selling. A lot of land has appreciated, but no one is buying. So really, again, it goes back to what was your investment strategy? Why did you want to do it? So I guess you wait, but Ken has said he would go the REIT way. So that's something for you guys to ponder on. So again, this would be my last question for you, Kenneth, for the day. And this has been very interesting, and it's good to learn more about real estate. And I know a lot more people will watch this show later on because we actually have it on Facebook and also on YouTube. So my question for you, Ken, is this, right? If a family is in the real estate industry, what do you think they need to do to ensure that the next generation continues to participate in family business? I'm really big around creating generation wealth. If you've been seeing my shows, I've been talking about family business. I like the fact that your parents made you go to Lloyd, Masika and learn the ropes and eventually became your industry. What do you think that families need to do to make sure that then now you're actually building these great real estate businesses that generations to come will work in it or continue to own it, and we'll have a vibrant real estate industry owned by people who know what it is that they do? What do you think about that? Next generation.
Well, I mean, one of the ways to look at it is that obviously we all get into careers out of interest. So different people will have different interests, and if property is not what sort of floats your boat, I think there's very little that will get you to go that way. But that said, if you have a real estate business that is structured well, right, then you have what you call business continuity. So even if you have one generation that's not particularly per se property people, the business should be able to survive you, survive them, and find another generation that would find the business still there. And I think that's one of the things that as Kenyans, we need to get into the habit of trying to create businesses that not only survive ourselves, but survive ourselves several generations going forward. And how do you do that? It's good corporate governance, a good risk taxonomy where you identify where the issues are, and a good strategy. A lot of family businesses, in my opinion, tend to go wrong where nobody knows. You basically sit down, you might assume, and a lot of it tends to happen, especially with families, you tend to have that misnomer that we all know where we are going, right? But if you don't articulate that strategy properly and you come to a consensus that this is where we are heading to and where we are going, you tend to have problems. Where that strategy is there, and I think I wouldn't mention names. We know the family businesses, be it property, be it insurance, be it whatever, that have gone from strength to strength. But if you look at those businesses, they tend to be very, very well run. Yes, there are family members in the whole in the whole equation, and the family members are significant shareholders. But when it comes to running the business, they treat the business as business. Not family discussions are held separately. We've also seen the cases where now that whole family conversation comes into the business, and obviously the detrimental effects that has when you disagree. So it's interest, it's structure your business to survive you and generations. Have a good corporate governance, risk taxonomy, and strategy. And if the strategy is good, then a business will weather. It will weather skipping a generation. It will weather COVID. It will weather anything that's thrown at it. That's my 2 cents of it. So I guess I'll wait and see if many of my sons will take over. Yes, that will be the proof.
I really liked what you said, Ken. Structure your business to survive you. How that looks like, whatever you need to do to make sure you structure your business to survive. Everybody knows the strategy. Everybody has the vision. Then that is how you will continuously have businesses that last for more than one generation. So again, thank you for that. We are out of time. And so anyone else who has a question for Ken, you can always reach out to him later on or through us at Regal Africa. What I'd like you to do for me, Ken, is just give us your last remarks. Today, the topic was building a successful business in the real estate industry. What do you say? What are the last remarks in regard to that?
Okay. I think I'll in giving my last remarks, I'll go back to the first question. Real estate is a long-term investment. And to build that business, you'll have to get in the requisite competencies. You'll have to be a person of integrity, give your view and opinion, no matter what's going on around you. You must be transparent, right? And transparency, like we said, is in everything. Why did you come up with this value, or and then the rest of it? You should be able to be transparent and say, this is how I came up with it. And lastly, it's a long-term investment. So some things will only come in fruition with time, where you build a name, you build the trust. It's time. Actually, a lot of my last take on it will be it's time. It's very difficult to do a real estate business in a couple of years. No.
All right. Thank you, Ken, for giving us your time. An hour goes so fast, but I'm very appreciative that you took the time to share with us about your experience in real estate, how you got into it, and really more around the REITs, because I think that's something a lot more people need to learn. You have ended by saying it takes time and you need to build a brand, you need to build a name. So thank you for that and for sharing with us your insights about building a successful real estate industry. I also want to thank everyone who's joining us on this business conversation with and Gaitha. I really appreciate it because, like I said, I started this show so that I could be able to answer any questions that you may have in regards to business, in regards to building successful, sustainable, and scalable businesses. So every time you join in, then I know that you're willing to listen, because once you're willing to listen, you will learn something, and I believe that will ensure that you then level up. So thank you again for joining me here at the Business Conversation with Anne Gaitha. I'll see you next week, every Wednesday at 6 p.m. East African time, 8 a.m. Pacific Standard Time. So until next time, bye-bye.
Thank you.